you understand valuations and you understand that prices are not measured arbitrarily. And when we measure things in dollars, it's very difficult for people to understand that until you take a step back and use gold as the measurement stick instead of dollars. You'll find that all prices are falling in relation to gold, but in dollars they've all gone up. I mean that. I think that that's what this system is, and it's very obvious to me. It's simple and it's obvious and it's clean. This is all about a lack of trust, man, and it's accelerating.
I think longer term, silver's going to outperform gold simply because of the ratio. It's still over 60 to 1, and it comes out of the ground at 10 to 1. I mean, even if we don't get back to the historical number of 16 to 1, even if we get back to 30 to 1, it's still silver's going to basically double the performance of gold from here. I mean, even in my lifetime, you've seen a Dow to gold ratio at 1 to 1. Back in 1980, you had the Dow at 800 and you had gold at 800. I mean, you very well could see the Dow collapse to 25,000 and gold go up to 25,000. There you go. You're back to the 1 to 1 ratio.
The modern financial system faces a significant challenge in how value is perceived, as most individuals measure wealth through the lens of a fluctuating US dollar. This perspective makes it difficult to understand true market dynamics until one takes a step back and uses gold as the primary measurement stick instead of fiat currency. When measured against gold, the dollar's loss of purchasing power becomes undeniable, revealing a systemic decay that is often masked by nominal stock market gains. As the global economy continues to be saturated with debt, the move toward hard assets is not merely a trade, but a necessary transition to a system where valuations are grounded in physical reality rather than arbitrary paper entries. AndySchectman and BillHolter are prominent experts in the fields of monetary history and precious metals, recognized for their deep analysis of the fracturing global financial architecture. They argue that we are entering a period of profound regionalization, where gold will return as a neutral reserve asset for international settlement. They emphasize that silver is currently positioned to significantly outperform gold due to a fundamental disconnect in the gold-to-silver ratio. While silver is mined at a ratio of roughly 10 to 1, it trades at over 60 to 1, suggesting that a return to historical norms would lead to a massive valuation reset. As trust in Western institutions continues to erode, the move toward physical delivery on global exchanges serves as the ultimate insurance policy against systemic insolvency. Now, we present their clips from his interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I think, to see the number of contracts added as the month progresses. And, it's up 5, 6 times. That's unusual because normally the first day of delivery, those that are going to stand for delivery do so. Now, when you do it later in the month, it's not as obvious, I guess, is the way that I would look at it. The first day notice for April deliveries, remember, first day notice, considering that in just about every month we've seen the first day notice is much smaller than what we see by the end. A big first day notice in gold, 10,138 contracts. That's 1,013,800 ounces of gold delivered. And 1,181 silver, which is 5,905,000 contracts, were delivered the first day. That is a very big deal done again. And to me, it's from a standpoint of gold and silver, it encapsulates everything that you and I have talked about since 2020, when you were the first person that I really hammered home what I was noticing in 2020 then as the deliveries, as being way different than anything we'd ever seen. And it's a trend that I was fortunate enough, I guess, or lucky enough to stumble on and grab onto it and watch it, because that to me is the difference. And I never understood it when Jim Sinclair used to say, this is how you win, you stand for delivery. I had a local financial advisor in Minnesota when I lived there who would follow Jim Sinclair and told all of his people to stand for delivery. And I laughed about it because he had all these clients who had 100-ounce bars of gold, subsequently ended up trading them into coins. And I thought, well, that was just a huge pain in the butt for the clients And it didn't amount to anything. And when you're in the middle of things, when things are normal, right? When trust is abound within a system, you don't see it. Even though someone's telling you, but this is how it happens, you don't see it. You dismiss it. And I think everything you could argue centers around trust. I mean, empires don't usually die like that. I would argue they die when trust openly leaves the room, quietly leaves the room, and openly. And I think people need to understand that the reserve status for the United States is all about trust. It's built on one thing and one thing only. Above all else, when we closed the gold window in 71, it's trust. And trust in institutions, trust in country, trust in the shipping lanes, trust in the country being not only neutral, but the stabilizer of the system. And this is how we took over for the pound sterling. We had the balance sheet, we had the gold, we had the military, we were trusted. We were on a moral high ground then. Greatest generation ever. I was a young kid starting in this industry, talking to people your grandfather's age, Dunnigan, and they were amazing people, an amazing generation. It's hard for Americans to realize that because everything we do is valued in dollars. If you grew up as a kid in Europe where every country was a different currency next door, just like states here, you understand valuations and you understand that prices are not measured arbitrarily. And when we measure things in dollars, it's very difficult for people to understand that until you take a step back and use gold as the measurement stick instead of dollars. You'll find that all prices are falling in relation to gold, but in dollars, they've all gone up. I mean that. I think that that's what this system is, and it's very obvious to me. It's simple, and it's obvious, and it's clean. This is all about a lack of trust, man, and it's accelerating. In fact, this time, it's almost as if the treasuries are being sold and is being purchased by the big money through these rates have gone up, which is difficult for, I think, people to comprehend who have been, mainstream dollar bulls and analysts forever. The public, the big money are diverged. The big money is owning gold and selling treasuries. The big money sees things clearly. The little guy doesn't. The little guy is still all in equities. They're all in traditional systems, in the banking system. They don't own gold and silver because, well, gold's too high and silver's too volatile. But that plays right into the hands of whoever the hell is standing for delivery at levels no one's ever seen before. And it's an easy manipulation for these people if that's what they're trying to do. Who are these people? I don't know. People with a lot of power and a lot of money and who aren't using margin to stand for delivery, who see things very clearly. And if this continues, look, if we walk away from the Straits and now you got Trump saying to England and some of these NATO countries, in particular England and France, go get your oil yourself and, get some courage, go find some oil yourself. The rhetoric is getting divisive. This isn't an environment where we would expect good things to happen to the dollar, because if we leave and they're still in control, the dollar hegemony is dead. And the belief that you will be protected by the United States after Afghanistan, then this, or look at Iraq. We go in there, we destroy everything. Here comes ISIS. And we're still there 22 years later. The world does not believe in the dollar system, the petrodollar system, where we exchange protection and shipping lane safety. Well, what shipping lane? We're the most powerful military in the world, and the straits are still closed. So I think the whole system is being questioned. I really do. And you can see that. The world is preparing to trade in their own currencies and settle imbalances in gold, period. If you don't see that, you're missing the biggest picture ever. When you see this, the Asian countries, which are 800 million people, twice the size of the U.S. and China's largest trading partner by far, sign on to the SIPS, the cross-interbank payment system, not SWIFT compliant or compatible, and settling imbalances in gold. What more do you need to see? But this is just the icing. I think all of these countries within the BRICS infrastructure, that is what they are setting up. That is the whole idea behind the expansion of the Shanghai Metals Exchange. The world is accumulating gold and silver. The public is still here in this country, still under the same belief that everything's going to return to normal.
The global financial system is currently witnessing a massive surge in physical gold and silver demand, marked by an unusual increase in delivery contracts on major exchanges. Unlike typical market behavior where participants settle for paper, a growing number of institutions are standing for physical delivery, with contract volume rising 5 to 6 times higher than normal as the month progresses. This trend reflects a strategic pivot toward hard assets that exist outside the traditional banking infrastructure. This shift is further validated by international developments, such as major economies like India joining non-SWIFT compliant systems like the Cross-Interbank Payment System, CIPS, and opting to settle trade imbalances in gold. With over 800 million people represented in these shifting trade blocs, the move away from dollar dependency is accelerating. As global powers increasingly choose to settle in bullion rather than fiat, the transition to a multipolar monetary system based on physical reality is becoming the new standard. Let's get back to the interview.
We're pretty close to a bottom. I think we probably have already made bottom a week ago, Sunday morning. Sunday night, Monday morning. You got gold down to right at 4,000, and you had silver at what, $61. I think they ended the day up on that on Monday. But it looks like the bottoming process. It's happening. Whether we hit absolute bottom or not, I don't know. But once this thing bottoms, I think you're seeing, because of the physical demand, I think you're going to see much higher prices, and I think new highs by the end of the year anyway. The biggest difference is the physical demand. I mean, you can see that on the exchanges with the inventories getting hammered. You can see that where refiners can't keep up, and you can see it with, central banks have been buying. Although I will say part of the reason you've seen softness in gold is there's been a systemic margin call, if you will, and what's been sold. Gold is one thing that's been sold to raise cash to meet margin calls. So yes, it's a hedge, but also it's a piggy bank. Yeah, I don't think average normal people. That's not where the firepower is going to come from. They're going to see institutional money come in, and at some point there's going to be real fear out there, and fear is a much greater emotion than greed. Certainly. And also remember, on these paper exchanges, the leverage is to the downside. So if there's margin calls via fear, it'll be shorts being forced to cover, in my opinion. I don't think it matters. I think longer term, silver's going to outperform gold simply because of the ratio. It's still over 60-1, and it comes out of the ground at 10-1. I mean, even if we don't get back to the historical number of 16-1, even if we get back to 30-1, it's still, silver's going to basically double the performance of gold from here. You have to pay attention to the industrial side. I mean, that's the story. Industry, the solar industry, medicinal uses, technological uses. There's so many more uses today than there was 10 years ago. And that's a big part of the offtake from the inventories has been for end uses. There's no way to tell. I mean, we're so far out, and we have a war going. We have two wars going on. And obviously, war uses commodities. War disrupts supply chains for commodities. So I think commodity prices are going to go higher, and I think inflation is going to go higher, and I think you're going to see interest rates all over the world go much higher. And that's a problem because the financial system is so leveraged. A credit crisis, a currency crisis. You have to understand that financial markets, including stocks, are grossly over-levered. And when that leveraging unwinds, you're going to see much lower prices. I mean, even in my lifetime, you've seen a Dow to gold ratio at 1-1. back in 1980, you had the Dow at 800 and you had gold at 800. I mean, you very well could see the Dow collapse to 25,000 and gold go up to 25,000. There you go. You're back to the 1-to-1 ratio. In fiat terms, very well could be higher. But in terms of gold, if you measure it versus gold, I think the stock market would be much, much lower. In other words, it'll take less gold to buy the same stock market unit. First off, I'm not a big fan of this at all. It looked like the first week or two, it might be a week, 10 days, 2-week program, and then they pull back like they have in the past. Now they're talking about boots on the ground. This is the bottom line is being a loser. And when I say being a loser from the financial markets standpoint, I think this is going to really illustrate or pull the curtain back on much of the overlevered positions in the West. I think it very well could create a financial panic.
Right. Yes, and we see.
And one other thing, we were told in the first week that 2/3 of all of Iran's rocket launchers, etc., were wiped out. Now, after 4 weeks, they're telling us 1/3. Well, which is it? Obviously, it wasn't 2/3 3 weeks ago, and is it 1/3 now? We're told that the Iranian Navy was destroyed. Well, how are there Iranian boats in the Strait of Hormuz that are turning tankers back? I thought they were all gone. So the first casualty of war is the truth, and I don't think we've been fed the truth. And I think if Iran is able to control the Strait of Hormuz, it's a disaster for the Western world. It's a disaster for those that import that oil, because it's 20% of total supply. It's not really affecting us here in the U.S. because we basically use our own oil, our own gas. But the rest of the world, I mean, look at Australia, look at Europe. The rest of the world is suffering with much, much higher prices and lack of supply at any price.
The global financial landscape is characterized by a dangerous disconnect between the perceived stability of paper markets and the reality of a fracturing debt-based infrastructure. While mainstream outlets often focus on nominal gains, the persistent drain of physical bullion from Western vaults serves as a definitive signal that the world is preparing for a new monetary paradigm. This structural realignment is not merely a technical correction, but a fundamental restoration of gold as the primary measurement stick for global value. As central banks accelerate their shift toward physical settlement, the traditional paper tail that has long manipulated prices is losing its ability to mask the true extent of systemic insolvency. The upcoming months will likely test the limits of institutional trust as geopolitical bottlenecks, such as the potential closure of the Strait of Hormuz, threaten to trigger a secondary wave of global energy and food inflation. These pressures occur as the U.S. national debt surpasses the critical $39 trillion threshold, leaving little room for error in Federal Reserve policy. In this environment of fear and loathing, the most prudent strategy remains the acquisition of assets that carry zero counterparty risk and exist entirely outside of the banking system. Once the current liquidity washout is complete, the path toward the historical 1-to-1 Dow-to-gold ratio will likely become the defining trend of this decade. Share your thoughts in comments section below. If you found this market analysis valuable, please support the channel by liking this video and subscribing for more exclusive precious metals content. Don't forget to hit the notification bell to stay updated. Thanks for watching.